guys, BD Investing here. Here are 3 Canadian high-yield dividend stocks that you need to be buying. And they pay dividends on a month basis, so it's perfect for passive income.
If you're looking for reliable income streams from your investments, then monthly dividend stocks can be a great option. In this video, we'll be highlighting 3 Canadian monthly dividend stocks that we think are worth considering for your portfolio. Stock number 1 is Pza Pizza. Ticker Pza.to Pizza is a well-known restaurant chain in Canada that is known for its pizza, as well as a variety of other menu items such as chicken wings, salads, and sandwiches. The company operates both corporate-owned and franchise locations and generates revenue through the sale of food and beverages to customers. So far, Pza Pizza has a sponsorship with the Toronto Leafs, Raptors, Ottawa Senators, Oilers, the Flames, you name it. In terms of financial performance, Pza Pizza has a strong track record of growth. The company has consistently generated increasing levels of revenue and has demonstrated an ability to generate positive cash flow. It has an average revenue of $33 million a year. Pza Pizza's current dividend yield is 6.17% and pays a monthly dividend of 7 cents. Pza Pizza has been consistently paying dividends since 2005 and hasn't missed a payment. The next stock we will be talking about is Diversified Royalty Corp. Diversified Royalty Corporation is a publicly traded company with the ticker symbol DIV. The company is engaged in the business of providing royalty financing to companies in a variety of industries, including restaurants, healthcare, and education. One of the key aspects of Diversified Royalty Corp's business model is its focus on providing royalty financing to companies that have a proven track record of success. By partnering with these established companies, Diversified Royalty Corporation is able to generate revenue through the collection of royalties based on a percentage of the company's sales. Some of the companies it has partnered up with are Mr. Lube, Oxford Learning Centers, Air Miles, and Nurse Next Door. Simple businesses that work. DIV has an attractive dividend of 7.83%, which comes to about 1.8 cents a month. DIV has been consistently paying monthly dividends since 2014. The only time I can see it missed a dividend was in March 2021. This stock is great for passive steady income. If it survived COVID, it can survive other market headwinds. As for the dividend growth, DIV Board of Directors has approved a 2.1% increase in DIV annual dividend from 23.5 cents per share to 24 cents per share, commencing January 1st, 2023. DIV revenue has great annual growth and great earnings. Only in 2020 it had negative earnings due to the pandemic and shutdown of businesses. Recently, it has beaten or met all its earnings calls. I think Diversified Royalty Income is a great stock to own. It is a simple company that owns simple businesses. In times of uncertainty and bear markets, the best stocks to invest in are boring companies. The third stock we will be talking about is SmartCentres Real Estate Investment Trust. SmartCentres Realty is listed under the ticker symbol SRU. The company is engaged in the development, acquisition, and management of retail properties in Canada. Its portfolio includes a mix of shopping centers, big box retail properties, city centers, and power centers. One of its major tenants is Walmart in the city of Vaughan. One of the key aspects of SmartCentres Realty's business model is its focus on the acquisition and development of retail properties in strategic locations. The company aims to create value for its shareholders by maximizing the potential of its properties through leasing, redevelopment, and other initiatives. Just watch their video. They have 185 key properties across Canada. 60% plus of their rent comes from strong essential service tenants. They also have 275 individual projects across 97 properties. They are building a city center for Vaughan, which is a partnership with TTC, Toronto Transit Commission, called Smart VMC. Let me know in the comments if I should make a separate video for SRU stock because this company is very interesting. In terms of financial performance, Smart Centers Realty has a strong track record of growth. The company has consistently generated high revenue and positive cash flow. The revenue in 2021 reached $1 billion with earnings of $827 million. The stock also has a 13% average annual return since IPO. They have also grown their assets to a massive $11.9 billion in the last 20 years. SRU has been consistently paying out dividends since 2003. It has a current yield of 6.9% and pays a monthly dividend of 15.4 cents. Since 2014 to 2019, they have increased the annual dividend by 5 cents per unit. In my opinion, Smart Centers is a great stock to own, but it is a real estate stock and the real estate industry can be subject to various economic forces. I'm a long-term holder of SRU because it has a potential for a lot of growth. I own all 3 of these dividend stocks, and you can see that by downloading and following me on this app called Blossom. Link is in the description.
So guys, there you have it. 3 dividend stocks. You have Pza Pizza, Diversified Realty Income, and Smart Centers Realty Income.
So guys, just do me a quick favor and subscribe to my YouTube channel, turn on the notification button, and like, comment, and share.